Welcome to our 2020 Online Personal Finance Institute. Today, our personal finance topic is taxes, and I'm your host, Ruth Cookson, the Director of the Center for Economic Education at Old Dominion University in Norfolk, Virginia. With me today is Anita Collins, the Learning and Development Manager at PB Mayors. She has more than a decade of experience in learning and development and is a licensed CPA. Welcome, Anita.
Thank you.
Tell us a little about yourself.
Hi, Ruth. I have been with PB Mayors about 3 years. I have the great ability to connect both my careers. I'm a CPA, still licensed in the state of Florida, but here I get to help support those CPAs through learning and development to make sure we can stay relevant as our profession progresses. Thank you for having me.
Oh, thanks for being here. I'm going to work our way through a series of questions that teachers have found students have a hard time with.
Okay.
Look at the first question. What is a W-4 and why is it important for a high school student to fill it out properly?
So thank you, Ruth. A W-4, and if I might show you real quick, the W-4 is an information form that you fill out when you start to work at a job. And what happens is the employer will give you this employee withholding certificate. You fill this out so your employer knows exactly how much to withhold. The information you provide on this will give you what amount of taxes is going to be deducted out of your check. That's the W-4.
Should students be putting exempt, or is there any special thing for our student to do on a W-4?
Oh, great question. Actually, on the second page of the W-4, it'll walk you through, that first page actually will walk you step by step. So that's a question that's actually done on a case-by-case basis. It depends on your income. It depends on whether or not you be claimed on someone else's return. So if I'm a student, simple case, I'm a student, I still can be claimed on my parents' return. I would personally put 0 because you have no exemptions. Your exemption is going to be claimed on your parents' return. Now, if you're a college student and you can't be claimed on your parents' return, depending on your income, you may want to claim 1. The more exemptions you claim on your W-4, the less taxes that will be taken out. And with the tax law, withholding tables changing as they did last year, a lot of people found themselves owing taxes because the amount of taxes were reduced based on that withholding. So follow the steps through the actual form. I have a W-4 form here because it'll walk you through what you need to do. Can you claim dependents? Are there other income or deductions you may have? So unfortunately, there is no one answer fit all. But if I'm a high school student, I just have a job, I'm making a few bucks, I would just claim 0 because my parents.
Claim 0 and talk to your parents.
Talk to your parents
before
yes.
you fill this out.
Absolutely.
That's really good advice. It never would have occurred to me
Yes.
as a teenager to talk to my parents before I filled out forms for my job.
Yeah.
So,
and honestly, Ruth, sometimes parents may not have all the answers. They may have to talk to their tax consultant, but
right.
Absolutely talk to somebody.
Great advice about talking to parents about the W-4. We've looked at a W-4. What's the difference between a W-4 and a W-2?
Ruth, that's a great question. A lot of people get that confused. The W-4 is what you filled out as you started a job. The W-2 looks a little different than the W-4 in that it is when at the end of the year, when your employer tells you how much money you've made, how much withholding they've taken out based on your W-4, and then you would use that to file your taxes. So your W-4, you fill that out before you start to work. It tells your employer how much to take out. The W-2 is the year-end tax statement you get from your employer that tells you, here's how much money I made, here's what was withheld from my check to pay my taxes, and you actually use that W-2 to file with your taxes. Does that make sense? W-4, you before you work. W-2, you get at the end of the year. One tells you how much to take out. The other tells you how much was taken out for withholding tax.
You almost wish that the W-2 was first, the one you fill out, and the W-4 is the one you get because.
But it is very confusing. Yeah, it is very confusing. And if I know when I was in high school many years ago, I worked a couple of jobs. So sometimes you'll get 2 or 3 of those, and you think, oh my gosh, what do I do with that? But This is an employer is required to give you a W-2 at the end of the year if you worked and made a certain amount of money. And then parts of that gets filed. So copy A goes to the Social Security Department, copy B goes with your tax return, copy C is for your recs, your state, and then they have other copies that you keep for your records. Anytime you fill out anything, always, I like to keep copies. I don't keep my copies electronic, but keep copies of whatever you complete.
So you've gotten your W-2 and you've kept the copies, and you've also waited to make sure that you have all the W-2s from the jobs that you've worked for the past year, and you get ready to file your taxes. One of the biggest misconceptions that students have is the difference between a deduction and a credit. So what is the difference between a tax deduction and a tax credit? And what are some examples?
A tax deduction basically reduces the amount of your taxable income. So you've got all your W-2s, you've got your 1099s, which may be interest or dividend, all the income you have coming in, that equates to your total income. These deductions reduce your income. That's a tax deduction. A tax credit, on the other hand, reduces the actual tax you owe. So what I tried to do is I tried to put, this is a simple, now by all means, this is not what a tax return looks like, but simply put, if I've got all of my income, there's my total income. The tax deductions reduces that taxable income. The tax on that taxable income is directly reduced by the tax credit. So deduction, reduce income, credits, reduces tax. Does that make sense?
This is a great chart. To be able to, I think it's important for students and for anybody to visually see that this, here's the steps, deductions come off the top, and then tax credits at the end.
Okay. Yes,
that makes a lot of sense.
Exactly.
What are some examples of common deductions and common credits?
So some of the tax deductions, you may have student loan interest, state and local taxes, medical, home interest, charitable deductions. Now, sometimes they are subject to limitations based on your income. Those are tax deductions. They will directly reduce the taxable income. A lot of times you'll find these on what we call the Schedule A, the itemized deductions. Tax credits, on the other hand, are child dependent care. So if you pay for your child while you work to go to a child care facility. The earned income credit for people who make under a certain amount of money with dependents. And then there's some education credits, which you just have to make sure you qualify for some of those things. Those credits will reduce the tax that you owe.
So some of those sound like they're really important for students to remember and understand. Child care tax credit, student loan deductions, medical deductions. As you're going to file your tax return, what kind of documents should you be keeping all through the year that might help you keep track of these deductions and credits?
So that is the key. And I have a friend who shall remain nameless. She was so excited because she filed her taxes on time for the first time in like 5 years. And most of it, Ruth, is because she waited to the last minute to try to get her things together. So absolutely start to keep your things early in the year. Please, please, please start a file. Whatever works for you, you should start that file. What do you need to file a return? What I would do is I would start with make sure you have prior year's returns. If you didn't file a return last year, obviously you wouldn't have that, but any prior year return you have, because it just kind of jogs your memory as to what happened last year. Any of the W-2s, remember those are the ones you got from your employers. Any of the W-2s you have, any Form 1099s. Form 1099 is called an information form, and you'll get those if you've earned dividends, if you've earned interest, if you've have rental property, retirement, even gambling winnings come on a 1099. Make sure you've got all of those, and any other income documents or receipts for deductions you are taking. Those are all of the things you're going to need for your tax return. And new over the last couple of years is any transactions you're using with virtual currency, so the cryptocurrency, Bitcoins, all of those things, yes, they need to be reported as well. So you make sure you have documentation of those. The other thing you want to make sure is that you have the correct tax forms. The tax forms change from year to year, so I just can't go pull a 1040 from 2018 to file this year because of the tax law. So make sure you have the correct forms. You can get them on the irs.gov website. The federal due date typically is April 15th for federal taxes. However, due to COVID-19, an extension was granted to July 15th. Now, you can request an extension to file, but that does not give you an extension to pay. You must pay when you file that extension. As I mentioned earlier, my friend who was all excited to be able to file her return for the first time and not file an extension the last 5 years. But when she owed, she had to pay. So even though you file that extension, you still have to pay. That's one of the things I want to make sure you do. Now, as far as keeping them, you do what works best for you. I know I'm more of an electronic type of person. My husband is paper, but we work on it. So find a system that works for you. I like to keep a note page, a note section in my notes. I have an IRS, I have a 2000 whatever year it is, and I keep track of all of the things that I will need for my tax return. So any receipts that I know I have, donations, we have nieces and nephews that already have fundraisers. You're donating to people's causes on Facebook, Instagram, or whatever you're doing that way. Jot those things down. I put the date, who it was, and the amount and how I paid, whether it was PayPal, whether it was out of my checking account, whether it was on a credit card. That way I know it's in my mind that I have one document I can email to myself at the end of the year and say, here are all the things that I totally forgot about. You add those to the files as you receive them. Now, some people are going to send you like paper documents. So we also have a folder, because my husband is diehard paper, that has the tax and the year on it. And we put those things in there so that between those two files, we have things in that one place. So you add things as you receive them, because if you're like me at the end of the year, I don't remember giving Casey that $40. Yeah. Oh, that was good. Thank you for reminding me of that. Or you may get an email confirmation of a donation you made. What I will do is I'll save that as a PDF into my tax folder on my laptop. Having everything you need on hand before you sit and prepare your taxes is like peace. It makes things so easy. You don't get uptight, and it just flows. If you do a little work throughout the year, invest a little time throughout the year, the end of the year is a piece of work, especially if you use one of the electronic filing, online filing, or software that I won't name any of them. But if you do that, yeah, the beautiful thing is, if you use that year after year, they transfer all your information. So you don't even have to do a lot of that, but do a little bit all year and it'll pay eons.
The advice to keep a list of everything that you donate on your phone in a little notes file, I think that's brilliant. I have that problem too. I, donate to somebody's birthday, on Facebook, it's my birthday. Please donate to this charity. And I'm like, sure, here's $10. And right. That $10 or $25, it adds up so fast. I might be paying it through PayPal, through a credit card. I might be, like you said, giving a niece or nephew for their walk-a-thons. And all of that adds up so quickly. And to have it all in one place, that's so easy, and it just makes so much sense. Yep. That's awesome. Yeah, one of the things that I love about doing these Personal Finance Institute, it seems like every year I learn something new and I get a great piece of advice. And this time is no exception. So thanks. We've filed our taxes and we're waiting for that tax return to come back. Now, one of the things that's been in the news lately is a refund anticipation loan and some of the problems that might happen with that. So what's the difference between getting your tax money back and getting a refund anticipation loan?
Well, I think the key word there, Ruth, is, just as you said, it's a loan. And that's what we have to remember. The RAL, or refund anticipation loan, is something that a lender will give you based on what they think you're going to get back from the refund you're going to get from your income taxes. So you are charged a fee, you charge interest just like any other loan. If for some reason your anticipated income tax refund is lower than what you thought, guess what? You still have to pay that back. If you really need the money right away, you do what you need to do. But if you're filing virtually, usually, and there are no mistakes or anything, you usually will get your refund in about 21 days. Now, that's not everybody, but really think before you do something like this. What happens is the bank or company or whoever it is, a lot of times people who do taxes will offer you a wrong. They will give you whatever. So if Anita was getting $1,000 on her as a refund, so what they would do, they would give me, and I'm making this up, they would give me $800 because the other $200 of it would be interest and fees for that loan. So when the government actually sends the check back, they send it back to that company or bank that gave you the ROW. And then if there's a difference, you have to pay the difference. So basically you're paying fees, you're paying interest on your own money to get it faster.
Right.
Now, how much faster? Some people will do it in a couple of days. Some people will do it in a week. In my opinion, if you are getting a huge refund, you're giving the IRS your money to work with throughout the year.
Yeah.
I try to just break even. But again, some of the, if you are getting a refund, think. Some of the things you need to think and ask yourself are, what is that interest rate? Because a lot of times the interest rate is a lot higher, and in some instances double what a regular loan would be.
Wow.
And I'm not going to tell you to go and try to negotiate a loan or go to your bank. You talk to your financial planner about that. What fees are you being charged? You may think, I'm being charged interest. Is that a fee? No, there are service charges. There's all kind of other fees that the company will charge you because they have to process these loans. And then you want to know what happened. So if Anita was expecting $1,000, they gave me the $800. The $200 was interest and fees. So, but my refund was only $800. My refund was only $700. Oh, wow. So where that extra $300 is coming from, I don't know. So read the fine print. I know a lot of times we sign things. It's money. It sounds good. Oh, we can give you your money now. It's your money. You know, there's a commercial. It's my money and I want it now.
Yeah.
And you do what works for you. But read the fine print. Ask a lot of questions. If you can't get answers, I would say, think twice about doing something like that. If most taxpayers who file electronically and have that deposit go straight into their checking or savings account, you usually get it in about 3 weeks. But you will pay a large price to get your money a few days quicker.
The key word seems to be loan. And if you're signing any kind of documents where you need to pay that money back, or if that word loan or there's interest involved, you really have to be careful, don't you?
Yeah, you do. And sometimes people stick things in front of you. Oh, we need you to sign here. And they may have the check already ready for you. And I'm just like, no, let me think about that.
Yes.
So, yeah.
Yep. Stop and think about the costs and benefits. And those costs are large because, like you said, it's your money. It's your money.
Yeah.
Be careful with it.
Be careful with it. Yep.
Make good choices.
You know what? I love that.
The theme all the way through the Institute.
Make good choices.
Make
there are consequences to any choice you make. So.
That's exactly right.
Yeah.
So what are the biggest mistakes that you find that people make when they're going to file their taxes?
Yeah, that's a great question. I know I'm saying they're all great questions.
These questions come up every single year. So yeah.
Oh, great questions. So I went back to the IRS website. Over the last 4 years, they've been the same. 1 or 2 have fallen off, but these have been the top over the last 4 or 5 years. Missing or inaccurate Social Security number. That's how the IRS ties your income, expenses, everything is tied to your Social Security number. So if you are doing it electronically, make sure that you type in the numbers right. If you're doing it manually, sometimes that 5 may look like a 3, sometimes that 8 may look like a 3, that 7 may look like a 1. So just make sure your Social Security numbers are right. You have to make sure that the Social Security number is right on all of your W-2s, your 1099, all of those documents. Because what happens is when the IRS gets it, it does a matching game with Social Security number. And then the ones that fall out will just kind of prompt an error in your return, and it won't be processed. Misspelled names. I know this sounds like, oh, don't worry about it. I left the E off. If your name is Betty with an E, put Betty with an E on it. A lot of the times, I have twin brothers, Brian and Bryant, and that T will get them in trouble sometime. And their Social Security number, believe it or not, is only a couple off. So sometimes they get their driver's license is just crazy. So make sure you spell your name right. Filing status. This is one of those ones that you need to make sure that you are doing right. I may be single. But I say, well, I'm head of my household, but there's
Right.
specific stipulations about being head of household. And if I don't meet those qualifications, I should not be filing head of household. Math mistakes. Again, if you're doing it electronically, the mistakes may not be as big as some of the ones if we do it by hand. Figuring tax credits and deductions, make sure you go through all of the forms. The IRS has instructions for each form it puts out. Make sure you go through those instructions. Sometimes it's step by step on how to do it. But a lot of times we want to say, oh, I know what this number ought to be. Oh, I know what this ought to be. Or my friend told me all I had to do was do this. When you figure those credits or deductions, make sure that you're putting them in the right place, that it is indeed a credit or a deduction. And then incorrect bank accounts. Let me tell you, this is a nightmare. When you're getting a refund and you put the right routing number but the wrong account, guess what? Somebody else is going to get your refund. And by the same token, if you put the right routing, wrong account number, somebody is going to be paying your taxes, which could be sort of fraud or identity theft on top of that. So make sure those bank account numbers are correct. And then the forms have to be signed, whether digitally, if you're doing them electronically, or manually. Those forms need to be signed. So while these may seem like, they're just simple mistakes, no big deal, I left off this. These are the things that will prevent your return from going through, being accepted from the IRS, and you getting a refund if you're going to get a refund within those 21 days. You want to make sure that check, double check, and have all those in.
So it seems that the key is double checking everything, making sure that your name's spelled correctly. And I would think that even your math might be taken care of by the electronic forms, but if you put the wrong number in, garbage in is going to be garbage out. So double check everything. It's worth it to take that time now than to have to worry about it later and not get your refund in the quickest amount of time possible. Without paying those fees to the RELs, right? To the RALs.
Exactly. And that's another reason, Ruth, if you have your prior year return and for some reason your taxable income is way off and you can't explain why it went way up or way down, chances are you've got a math error in there somewhere.
Okay.
So, yeah.
And it seems that maybe one of those mistakes might trigger an IRS audit too. So what happens? What's an IRS audit, and what should you be prepared for?
When you say the word audit, people automatically cringe. It's like, oh no, what am I doing? What am I doing? And you know what? If you have done what you're supposed to do, been honest, kept your documents, an audit is nothing but the IRS double checking to make sure that you don't have any discrepancies in your return. So it's like that little pop quiz that you think you're ready for, but you don't know, and you get a little angst about it. It's kind of scary. Oh no, I'm getting audited by the IRS. I'm like, yeah, you know what? As long as you've done what you're supposed to, then you're fine. The one thing I do want to mention is that IRS will not call you. They will notify you by mail. They are going to request what they need. They will not call you on the phone and say, Anita, Ms. Collins, we need this, and can you give us your social security number? So no, they will not call you. They will provide a written request for what they need, and that audit will either be managed through the mail. You send them, which is what I did. I sent everything through the mail. They send you something back saying, no, this is not what we need. You send something back. So it's a back and forth, or they can schedule an in-person. They're not doing in-persons right now because of COVID. But if you go into an IRS office to take whatever you need, whatever they're requesting, that's an office audit. If they come to your house, your place of business, they've not been doing a whole lot of home visits, then they can actually do it in the field. Most of them are being done by mail now because electronic age. Right. So it just kind of behooves us to do that. Again, the length of the time, it depends. It depends on the complexity of the audit. It depends on whether or not you have your information available. It depends on scheduling. So if they're trying to get together with you in person, oh no, I'm working this day, oh I can't, I'm out of town this day. I've known people who've had audits, it's taken a couple of hours, they pull the stuff together, send it to IRS, check, it's done. How do you get chosen for an audit? Sometimes it's random. Sometimes it's based on mistakes that they have chosen that they may see. So if a person who has not been paying their taxes and owe a lot of taxes over the last 5 years, then IRS may want to say, what are you doing that you're not paying all your taxes on time? There are things like the cryptocurrency is a new area. Some of those may be scrutinized. There are things around 1099s, the income, a lot of the deductions. You get into some of the deductions that people take, investments, things like that. So it just depends on what the IRS decides to choose. Most of the time, it's a random.
So the IRS will never call you.
No, they will never. And don't give your social security number to anyone.
Anyone.
Because I've had that call too, and I've been threatened to be put in jail. I said, okay, come on.
Having the information is the key.
Right.
That's what's so important about this course, giving our students the information that they need so that they're not taken advantage of.
Yeah.
Before we end the interview, I just want to ask you, is there any advice that you have for young people moving forward? Anything that you think teachers should make sure that they emphasize?
Just, like I said, it's your money, but you need to stay informed. There are a lot of opportunities to cut your taxes. Do it legally. Be honest about what you do. So when that audit letter comes, you don't have anything to worry about. But just understand there are ways to legally lower your tax liability. You have an obligation as an American citizen to pay taxes, and that's one of the things that you need to do. But don't be afraid to ask for help. I know one of my things is, I can figure this out myself. I can do it all by myself. I mean, even though I try to stay current, there are times when I have to go and ask one of our partners or one of our managers, hey, what do you think about this? This is where I'm interpreting this. Is this right? He said, no, this is what the reg says. He used to work for the IRS. So, I think I got it in there. But seek help. There's no shame in asking for help. It is not a sign of weakness. As a matter of fact, it shows that there's some wisdom in knowing what you don't know and seeking help for it. And then there's some resources available through this wonderful program that you all are putting on. And I have to tell you, Ruth, for one, I enjoy doing this. You all are just having such an impact on our future leaders by doing these kind of things. So at Financial Fitness, the 360 Financial Literacy, check out those websites and you'll be able to find those opportunities.
Thank you so much. Anita Collins, I appreciate you being here and sharing your wisdom with our teachers.
Well, I'll say thank you for the opportunity, Ruth. It's been my pleasure, and I look forward to doing this in the future with you.
Great, thanks. And this concludes our video on tax information. Thanks, everybody.